Good afternoon. This is Mr. Not Advice. This is my weekend update. It is Sunday, June 28th, 2026. As always, this is for education and information and perhaps enjoyment purposes only. So, okay, let's get right to it. I got a couple of things we're going to go over today. I wanted to go over this since AI has been and will continue to, I believe, drive the markets. I want to go over this. This was an interesting note coming out of Goldman Sachs, Mark Wilson. We've talked about this chart before. So, check writers are going to be those companies, let's say Mag 7. The Mag 7, despite all the AI enthusiasm, the Mag 7 are down 5% plus or minus year to date. Yesterday or Friday, Microsoft actually was able to go through and make a new 52-week low. It's now below its 2021 highs. When you put that in context, if you've owned Microsoft for the last 5 years, it hasn't moved. Amazon is breaking or did break below the 200-day moving average. Same thing happened over in China too. And then on top of that, Apple and Dell were both down 5% as Apple, PlayStation's another one, they announced a bunch of price hikes to counter the memory price squeeze. Where's all this money going? Well, those are the check writers. The check receivers are going to be your chip manufacturers. Micron's gross margins, as well as the industry, were largely cyclical prior to the great financial collapse and remained so until the AI boom really took off. However, it's still cyclical. Maybe this is a aberration. It's still going to remain cyclical, even though we are in the sixth inning, seventh inning, maybe, of the overall perhaps memory boom. As we go into this summer, it's probably going to hear more and more about the US midterms. There are, under the surface, there is a topic that Goldman has pointed out could become much more of a talking point or an issue. That talking point is job losses due to AI. Job losses attributed to AI seem to be accelerating, yet no one's out there yet with any data representing AI's positive impact. Tech share of total employment continues to decline. Yeah, that would make sense with the advent of AI. Average monthly job growth in AI affected sectors in the last 3 months, negative, and layoffs attributed to AI. Look at this. I think that's just getting started. So that might be something that starts popping up. Another thing that we have going on right now is holy cow, gross leverage is at all time highs. Hedge funds, however, have been aggressively net selling the US year to date. They've been buying Japan, Taiwan, and Korea. In fact, so follow this hedge funds net length built up in semis. Then power and data centers were added in even larger size. And from the second half of last year, memory stock net length has been added in size 2 times that of semis or power plays. Hedge fund performance, by the way, across all stripes, I thought this was interesting, has been, well, what Goldman says, excellent, up 14 to 18%. I suppose that is true. We've been in a very choppy market. That is excellent. I didn't trade the first five months, so who am I to criticize? Yeah. Systematic and multi-strategy hedge funds are making more alpha in non-AI names than in AI stocks. Well, that's interesting. Fundamental hedge fund performance is all AI driven. Okay, so that's a bunch of bullshit because, well, not that fact. I'm saying if you call yourself a fundamental investor, what the hell are you doing investing in, well, 80% of the AI universe of stocks? Final chart I want to look at. This would be US and Asia. US focused, Europe, Asia. Europe obviously is a big mess. That's why it looks like that. But let's just look at US and Asia. We're trading in non AI names. That'd be about 2%. It's about 10%. Or 1,000 basis points, whatever. It's 10% difference in return. It's even more so, more pronounced in Asia, primarily due to the fact that you have Taiwan. Their companies there make up that are participating in the AI spend make up a significantly larger portion of their total market cap of their stock markets. So I think that's why you're seeing that outsize. I mean, this is ginormous, uh, 30% at least. If you were not investing in AI names, yeah, I will tell you right now that there is a short term imbalance because of repositioning, end of quarter rebalancing, middle of the year rebalancing. And I think that's going to remain in place until June 30th. So all this action that you see right now, that unless you're in a strong trending stock, is being driven by this rebalancing. So for me, the safe to jump in the pool since it got canceled from last Monday, the safe to jump in the pool for me is July 1. Well, that's next week. We don't have a lot of time. 2 days, 3 days. And once we hit that date, and maybe start Monday, once we hit that date, I do believe that you're going to see a flip in flow. And instead of having automatic selling, you're going to have forced buying. A rebalance would look like this. If, let's say, you're a pension fund and you're only allowed to have 100% of all assets allocated. And because you've been in AI, your account is up, the pension's up 110%. Well, you're going to have to sell to get back down below the legal threshold as is described in your governing offering doc or whatever structure you have. So it's automatic. They have to do it. But they're going to come right back in and buy things up too. So I think it's important, I guess a long winded way of saying, I think it's important to take into context anything that happens with your stock over the next, oh, I don't know, 2 days. Anything that happens because of that, I think you've got to take with a grain of salt and expect and hope that on July 1st that you're going to see the opposite buy pressure coming into the stock. So we'll have to wait and see. All right, got a question from Mr. Stacks Edwards. Question was, is there any chance you can help me understand the subscription rights and warrants for EOSE? It's a bit confusing to me. I have 9,420. I'm just kidding. You can tell me to figure it out for myself, and it won't hurt my feelings if you want. Yeah, I looked at your profile and I didn't see that you're a Cowboys fan, so I'll be happy to help you out. Okay, let's take a look here. This is the summary of the offering. So, rights offering targeting 150 million. We know what the purpose is to fund EOSE's equity contribution to the Frontier Power USA joint venture with Cerberus. Record date July 1st, distribution date July 2nd. Eligible holders, common shareholders, plus holders of specific outstanding warrants. Okay. Units of common stock and warrants. Subscription price 10 to 20% discount to recent VWAP. Warrants valid using Black-Scholes methodology, 25 to 50% of offering value, and registered via existing S3 shelf. Joint venture, EOS Energy and Service Capital Management via CCM Frontier. Okay, capitalization 100 million. EOSC is going to put in 150 million funded via this rights offering. Develop and own long duration storage products using EOS Zinth technology. Benefits for EOS separates project financing from corporate balance sheet. Yep. Includes commercial agreements. Yep. Subject to final agreements, DOE approval, and closing conditions. Don't freak out about any of these because you have no idea and you have no control. So it's not a data point that you should spend a hell of a lot of time on. S3 was filed on May 13th. Common stock, preferred, okay, enables flexible future offers, including this rights offering. 339 million shares outstanding, supports both the current rights offering and other potential capital raises. I wanted to see, well, what if it took the 15-day VWAP as of Friday? What would all executions be? Or what would the pricing be? So the warrant strike price would be 714, which is 20% above the current price. Okay. Remember, it said there was a 20% discount, 10 years. These are for computations for the Black-Scholes model to estimate how many. Theoretical value of one warrant is about $5.13. for the 150 million offering, example of 35% warrant value, 52.5 million. Total warrants to issue, 10.23. There's your Black-Scholes computation. Shareholders receive stock at a discount and valuable long-dated warrants. Hey, here we go. Likely VWAP range. 15-day VWAP is 660 to 690, 20 to 30 is 690 to 750. Expected subscription price after discount. So here you go. You're looking at 528 all the way up to 621. Most like subscription price range will be 550 to 620 with attached warrants. So watch for the final prospectus, review full terms, exact VWAP and warrant details. Decide whether you want to do it. And yes, of course, consult your financial advisor before you do anything. Okay. I hope that answered your question, Stacks. If you're asking me, Stacks, whether I would do it, for me, I wouldn't do it if I own the common stock. I think I'd want to wait. I still would rather wait until they have an order or two, because I think that that is to me a much better risk reward payoff than where we're at right now. I mean, they talk about if you don't do it, you're going to get diluted. Whoop-de-doo. Anyway, Stacks, I hope that answered your question. While we're on it, I also got a email, or no, Twitter DM. So if you do have a question, DM me on Twitter, and what I'm going to do is I'm just going to post your question up here on the screen if you're chosen. uh, Mr. Joe Nigro? I'm not saying it the other way. Okay. What do you think of the KKR news? I think KKR is like any other bank or any other IB. They get involved if they think that they can be paid a nice fee and it's not going to hurt their reputation. That's all I can take from it. And I think I had one more question. Okay, here we go. Any view on whether we are seeing a subtle move to risk off dollar up and yields down? I don't think we are seeing a risk off environment come on last week. I can understand why it may have looked like that, but I don't think that's what we're seeing. I think what we're seeing is purely a mechanism of we just had options expiration. Then we have upcoming here the end of the quarter, end of the mid year before we enter to the 4 to 6 weeks of the strongest periods for the market. And we have midterm elections coming up. I don't think this is a redistribution of assets into safer stocks, if that's what you're asking. The auctions that I read about this week had very good demand, foreign demand. I think that the dollar up is just a continuation of the American excellence trade that I think actually just getting started. I don't think US investors have any reason not to continue to buy the dip. They continue to get paid for it. But interestingly, somebody who is smarter than me, Mr. Hartnett from Bank of America, there's a very simple line in the sand, Mr. Asymmetric Alpha or Mrs. Asymmetric Alpha. But do I think? No, I think the dollar up is a continuation or a starting of the American excellence trade. And I think the market could really rally into the end of this year, maybe even hit 8,300 on the S&P 500. So yes, I want to get long this market. I don't know if that answered your question, asymmetric alpha, but I hope it did. Let's look at a couple charts. I'm not going to make this overly complicated, right? Any moves that you see, like this business, which is 2 days, what I like to do is step back and look at the weekly chart, because when I look at the daily chart, I end up looking at all these gaps and this insanity. And oh, by the way, these gaps will get filled. I step back to the weekly, and what do I see? We're stuck in a channel. I look at the cues, same thing. Literally stuck in a stupid channel. Russell finally breaking out on the weekly. I still have to wait. Really, for my style of trading, I need to see 3033, the all-time high, be broken and close. So my hope is that we go sideways for a while before we break. I don't think we're going to. EOSE, bottom of the channel. If we get a reversal on this, and this has bounced here multiple times. So what do I think? If we get a close above this candle's high right here, Friday's candle high, then I will look to do two things. I will look to open a swing trade, and then I will look to sell short some puts. Here's why. Number one, where is this bounced? -1 SD, that's the orange. This thing likes to bounce between -1 and plus way up there, plus let's call it almost 3, 2.5. Bounce, bounce. This is technical now, right? Bots and algos. So I think that if we get the close above this candle high, we'll at least get a push to what? The mean, the white line, because bots and algos love to go to the middle. It's like their starting line. So that puts me at 709. But the problem I have making any type of price prediction is there's still outlier events that should occur by the end of this month. However, if this price fails, then there is no support for this stock until we get around 538, all $5. If we do not hold Friday's low, it's going to go lower and could in fact test $5 easily. I'm okay with that. Right now, I'm okay with it for this reason. You see this here is your MACD. We had this selling and look how low it went. Now, normally when you have selling and it makes a new low, your MACD should also make a new low, but it didn't. What did we get? Divergence. This tells me that the selling pressure is significantly less than previous, a third of what it was previously as measured by my MACD histogram, and yet it made a new lower low. If this bounces, I think it could be a very good bounce, but price has to let me know that first. This could change in one day. We get a big day of selling. I mean, this MACD could change in a day. Bitcoin. Yes, I think Bitcoin is getting loaded to here. I'll show you something here. I don't know if it'll let me do it, but we're going to give it a shot. There we go. If you saw this chart, you could arguably say there's a pennant forming. And what do I teach? Well, when there's a pennant forming, okay, it resolves to the trend. Okay. So all I did was I flipped Bitcoin. Now look at it. So now you can see why I keep calling for 55,000. I think it will happen this weekend. Maybe not. We don't have a lot of time left in the weekend. But this week, 55,000. That's why I think we're headed on Bitcoin. Any bounce in oil, I think, will be temporary, even with the overnight action of the not shooting at each other, not war, not resumption of anything, just shit blowing up in the Middle East, in Iran specifically, barring something like that that's more prolonged. Okay, I don't think the price of oil is done going down by any stretch of the imagination. Looking at PCT, okay, where are we at? Look at this break level, right? So the top of the gap, really. See it? And where are we back down to? Right here. By the way, if you're wondering if this MACD also works, no, not like EOSEs. It's actually opposite. So that's not good. Meaning that it made this low. This is how low the MACD sell pressure got. It made so far, it hasn't reached that low. It's well above it. And the MACD selling pressure is even heavier. So what do I think will happen? Well, I'm really not going to watch it. I still haven't sold any puts yet. I'm really not going to watch it until, well, maybe Wednesday. I'm definitely not going to be trying to call the bottom in gold. If anything, it's at a fantastic bounce level. Okay, well, let me leave you with this. I think until Wednesday, July 1st, market won't trade organically. But we have had a fair amount of good macro news, I think, over the last couple of weeks. So I think the American Excellence trade is just getting started, quite frankly. And I actually, putting my money where my mouth is, I will be trading full size starting Monday, tomorrow, which I haven't traded full size in forever. So I'm looking at a lot of different things, data points that I experientially are telling me we are going to enter a good period of trading for this market. So I hope you all have a great weekend. If you have any questions, DM me on Twitter, or you can email me at theboss@mrnotadvice.com. Otherwise, have a great weekend.